Hey traders, Chris Pulver here. Happy Monday. It is March 2nd. This is a weekly outlook for stocks, FOREX, cryptos, and everything else that's going on in this crazy, wild financial market week. It is March 2nd through March 6th. Let's talk. Just to put things in perspective, last week was one of the worst weeks we have seen in the stock market since 2008. Dow Jones was down 12.36% in 1 week. That's crazy. The S&P 500 down 11.5%. Last week, the NASDAQ down 10.5%, Bitcoin down just shy of 10% at 9.25%. The U.S. 10-year notes down to 1.163. We had pure panic. We had tons of volatility. We had lots of pressure going on. It was a wild week to say the least. Things that were happening in the stock market, in stocks in general, in the currency markets were wild and crazy, and volatility we haven't seen in literally months. But like I said, worst week since 2008. We actually had the largest single week in the volatility index, I think, historically. And we are back up to some crazy high levels with highs back in 2011, 2015, 2018. The only way that the volatility index has been higher in recent years was back in 2008's financial crisis. So full-blown coronavirus scare, not to mention everything was, we had a lot of conversations over the weekend with fellow traders and with some friends of mine, and a lot of it is just a sobering look at what the market reality is. Since the 2008 recovery, we have seen central banks play a big part in keeping everything propped and keeping everything sound and safe and sane and secure, and we've also suppressed a lot of volatility. But it seems like, as everything is exposed with coronavirus and there's sheer panic in the market, you have to remember that as traders, there is opportunity. So last week, I took the time to post a video. Here is my YouTube channel. If you're following me out there, I am on Twitter, on Instagram, and YouTube. Here is my channel right here. Videos that I posted last week. I just posted one on Friday, just kind of food for thought for the entire week. It was one of the wildest weeks we've seen in a decade plus. So the video Market Madness, coronavirus is really what's taking front and center. But the reality is it's the catalyst, right? I mean, I really think that, from a technical standpoint, this was inevitable. But you put the fear factor around coronavirus and the uncertainty around coronavirus, and that becomes the catalyst to create just panic. Okay, so anyway, that's a good video to watch if you want to kind of have some rational, technical, and fundamental thoughts. Today, we're going to go back and after a weekend of kind of just digesting the information, where are we sitting? So I'm looking at the dollar index right here. Back to previous highs in 2019, the dollar is starting to fall. There are two things I'm looking for in the dollar, and one is that we're either going to see this dollar continue to drop down, or we may see the dollar just briefly correct, head up one more time, and then we start looking for a big fall to the downside. Now, this type of behavior would actually allow us to see a really great trading opportunity on several dollar pairs, and it may be a great setup for what we're noticing on the euro dollar, which has gone pretty much ballistic. It's currently trading at 1175. This is nuts. Look at this on the daily chart. Recovery at 108, which we said was a technical low. We also filled that French election gap back in 2017. It's funny because what I have been talking about is that if we're going to see a weaker dollar, we're going to see higher volatility. And that is certainly the case right here. Now, the reality is this should not, and I say, from a technical standpoint, this should not be going to levels like 116, 117 without at least offering some type of pullback. But after seeing current price where it is, today's push even higher, breaking what now is a 2-year channel. If there is any short-term dips or short-term hesitation, this is a spot that I'm going to be looking for, building some positions to go long, right? In fact, this volatility, and again, just think of this from a swing low, swing high. I'm looking for higher lows to form, and I'd like to see if this can continue to go higher. If we have this crazy whipsaw volatility where we're going to see this big low, big high, another big low, I'm still looking for bullish direction in the medium term. So one thing that lines up with the seasonality is coming into the end of March, end of Q1, April and May are predominantly trend-bound months. If this euro, which has now been kind of labeled as the safe haven currency pair, which is pretty crazy, very counterintuitive considering what we started off this year seeing, which was a lot of euro weakness, and we have literally seen the euro dollar go, we're up 400 pips, or just shy of 400 pips from this low, literally just over a week ago. You go to euro Aussie, And you're looking at this ridiculous run higher. It's trading at 7,100 from lows at 6,100. That's 1,000 pips in the last 8 days of trading. You look at EuroCAD. We went from lows around 42 straight up to 49 and change. Unbelievable. This euro is nuts. Take a look at your currency strength chart for today. Let's see what the euro looks like. So we have our, this is actually the Aussie on top. This is the New Zealand on top, starting to balance out a little bit. The euro, again, kind of steady through the morning, around 6 a.m., 7 a.m. U.S. time, starting to get predominantly stronger. We have the yen at the bottom, the dollar second, the pound there. The Swiss is neutral. Last week, we saw the Swiss and the euro fairly strong. News-wise this week, we actually have a surprising amount of news compared to last week, which was pretty nuts, because I'm looking at the calendar from last week. Let's go last week, all high impact. There was next to nothing as far as actual economic news, but the coronavirus headlines were spooking the markets and, causing a lot of turmoil and panic. Going to this week, starting off a new month, we have a lot more high impact news. Take a look at what central banks are starting to show in their response. We had Jerome Powell speak last week, dropping some statements that the U.S. Central Bank, the Fed, will be considering rate cuts. One thing we follow in my trading room is this CME Group tool, which you're noticing is already looking at considering a price cut. This is crazy. 100% probability based on the March 18 meeting. Again, this is due to fluctuate here over the next couple of weeks, but a 100% chance of some form of action by the Fed. Now, the Fed currently sits at 1.5 to 1.75. So they're looking at pricing in a 0.5% cut in this month's meeting. So that's very proactive and unfortunately even very reactive by the Fed, if that's indeed what they do on March 18th. We might see this fluctuate. We might see another histogram pop up over here. That might be some probability of a 1.25 to 1.5, which would offset the current rates by 0.25% as opposed to what you're seeing right here, which is a 0.5% cut. But then you go into this week, we have a rate decision by the Reserve Bank of Australia. Let's go into this week's news, which is, there it is. Cash rate decision, you can see that RBA was at 0.75. They're forecasting for tonight, 10:30 p.m. Eastern Time on Monday the 2nd. Technically, that's going to be Tuesday's trading day during the Asia session. The RBA is looking at a forecasted 25 basis points cut to bring their rate down to 0.5. You have the Bank of Canada that is not expected to change rates here as of Wednesday, but oil is also a big factor in how the CAD is being priced, and oil has dropped significantly below that $50 mark. We're below 49. We traded as low as $45 or sub 45, and so bringing us down in oil is seeing a big move on the CAD. So it will be interesting to see what the BOC responds with. They do have a statement, an overnight rate expected to stay the same as far as today's forecast goes, but this is subject to change for the week. We also have non-farm payroll on Friday, so there you can see there's a ton of news. And don't forget about OPEC on Thursday, especially with oil in free fall down to levels around low 40s, which is a ton of support around $42 to $40. So OPEC might have to start jawboning, might have to start talking about their production cuts and how bloc countries and OPEC and even non-OPEC nations are going to start decreasing production and get stable prices when it comes to oil. It's been an amazing changing of price and an amazing turn of events when it comes to oil prices. We were as high as $66, $65, $66 to start off earlier this year. If we take a look at oil, look at this. Oil from the high, this is during the holiday when we had that, it was the Iranian leader that was killed in Iraq by the U.S., and it was high as $65, and we have gone where? Straight down. So you can see that oil is responding to support right around these 43.60 levels. That gets us back to lows in 2018. That's end of year, December 2018. And again, support-wise, that's a massive level of support. If we go any lower than that, then we would be talking about painful technical levels where oil-dependent countries and commodity-dependent countries do not want to see oil in the 30s and 20s. That means dollars per barrel. So it is really important that OPEC at least says what they need to say, possibly even hinting at aggressive production cuts to stabilize price, since we have been dropping significantly from 65 all the way down to current price. Lows today around 43 and change, but a nice little response to that thus far. It will be interesting to see what happens if we end up responding to this low and this comes back up to this high. Is that a reversal to get us back up into the $60 level? Are we going to see a response back on the volatility index? Because we go back to that chart, and I'll bring that up right here. This is the volatility index. I did the video on Friday about this. We have not seen highs in the VIX since 2010 and 11. There's another one in 2000. So we have this one here that looks like May 2010. We have one in August 2011. We have another one in August 2015 when oil, by the way, hit that $23 to $24 mark. That was the low in commodities. And then our disappointing Fed raising rates back in December 2018 that the market did not like, and the market tanked about 18 to 19+%, just shy of that 20% correction. And that was in December 2018 into January. And then, of course, we had our melt up from there. So we have not seen levels since 2018, 2015, 2011. If we're going to break and sustain a higher move in the volatility index above $50, then you're talking about legitimately running up to 2008 levels. Now, granted, fundamentally, what's happening at this current VIX, or what's happening with this current VIX, is not the same as what was happening back in 2008. It's a very different global economy. It's a very different market. Conditions are very different. But in 2008, we also did not have a coronavirus. We also did not have a potential unfolding, uncertain global pandemic. That's not officially been labeled yet, but cases continue to pop up. Deaths continue to rally. We have new hot spots for coronavirus. I know that there's a lot of scares going on in Italy and how bad it's going to spread into Europe. You take a look here with cases recovered and deaths. You just do the numbers. So we have 3,080 deaths divided by the total cases, and you're looking at a 3.4% death toll. So that's still quite high. And there's still a lot of uncertainties. There's no official vaccine yet. They're seeing a plateauing or at least a steadying in cases. And you hope that this is something that passes. Like, it's very disruptive to everything. You're looking at quarantines. You're looking at schools and businesses, supply chains slowing down, people not going to work, people staying remote, people not traveling. Friends and family not traveling. I was supposed to be going to New York this week, not traveling. Just taking necessary precautions. It is definitely making people think about what they're doing in the near term. So it still remains, and this will still be something that we have to acknowledge and be aware of. But at the end of the day, as a trader, there are opportunities out there. And so I keep going back to where we are sitting on some of these big levels. The dollar, I'm looking at the bigger play on the dollar. Bitcoin, cryptos, I want to see higher lows in 2019. I know that we had this nice start to 2019. We started to rally. I'm hoping we can find a way to form a higher low and still see 2020 highs that are going to exceed 2019 highs. All right. I would also like to see pairs from a technical side like Aussie CAD and Aussie in general respond to some of these these like 10-year support levels, or these 2-3 year downtrends, or these falling wedges, or these support levels, these oversold and divergent conditions. All the things that I've seen create major turning points and major reversals in the markets for years and years and years. We have the signs. All right. So Aussie CAD, for example, I still remain long in Aussie CAD and I remain patient. Now, all my trade sizes are small. I talked about that in my Friday video. I'm sitting in some small drawdowns. But if I get price on the right-hand side of this trend line, if I start to recognize price patterns in here, I'm still going to hold out to 90.20. I'm still going to hold out to 91.20, and I'll probably take some profit. Perhaps this becomes a much bigger move to the upside. But as two commodity-based pairs duke it out, we'll see. If I can get a nice little run to 90.20 and 91.20, and I'm sitting here from lows at 89 and 88 and 87, if I get price up to 9,000 or higher, I'm going to take some profit. So that remains my mission on the Aussie CAD, the Aussie Swiss, sitting at 20-year lows. Go to the higher time frame. Some of the technical signs I love to look at. Oversold conditions with a relative strength, and I also like to see disagreement in momentum. So price has gone lower, momentum is disagreeing. It's very noticeable on the daily chart. Okay, so you can see right here that we have a low in price, disagreement, and we are oversold. So I'm not calling the bottom, but I would think that within a relative short amount of time, this will start to technically allow price to recover. And maybe the recovery is back here to previous support. Perhaps this type of painful, aggressive move to the downside was enough to kind of flush out anybody that was trying to hold long, and this is now where the big money starts to come back in. But like I said, you have to trade this accordingly. You have to be waiting for more confirmation. One thing I'm continuing to look for myself and in the room is, do we have confirmation and turns coming on this sentiment strength line. And right now, the Aussie Swiss on the daily chart, no signs of turning on the daily, no signs of turning yet on the 8-hour. All right, so if we start to notice some aligned turns, well, that's a very different story as far as finding some lows, because we do see when lows are forming, we have a reason to stay bullish. We have not seen a low. Now, given the fact that we have gone very aggressively from the highs here around 66 all the way down to 62, that's a pretty aggressive push on a currency pair that doesn't like to move that aggressively, and especially doesn't like to move in that type of trend fashion. So again, near 20-year lows on this currency pair, I think we're going to see something technically allow this to recover. But I am being very patient right now. I'm not forcing trades. I'm waiting before I add on anything else. But the signs are there for divergence. The signs are there for oversold conditions. I get it, but it might push a little bit lower. So mentally, I have to be prepared for that. One other currency pair that I'm liking right now, we had just this violent sell-off. I made some pips last week on Friday on the Aussie yen. We have pending, let's see here, that was canceled. We were looking to sell with the break below 72.50 right there. 72.50 below, sell. We broke 72.50. We dropped all the way down to 69 and change. Obviously, there's a nice little short-term response for today's trading, but that was really just a short-term recovery. We're most likely going to sell those rallies, and I'm still looking for bearishness on yen pairs. I think the yen will be stronger. I think if there's any additional selling this week, if the VIX continues to climb and we start poking back above, high 40s or get above 50 once again, then that JPY is going to be very strong. We're going to have higher volatility, and I will be looking for short-term opportunities, short-term profits to potentially either offset some of the current positions that I'm holding or just be a reason I can grab some profits as I'm sitting more in long-term trades. But I think yen pairs are going to be pretty solid for some scalping opportunities. Aussie New Zealand. This actually is a really interesting pair. I feel like this pair has kind of given me its secret sauce. If we break above 105, which you can clearly see right now is not happening, even today's price action, we have a high of 104.83. There is something right now that's very firm at 105. So I would say that the must for this currency pair to head to 107.50 or higher, we must break 105. And so that's what I'm looking for is, perhaps this comes back down one more time to 103. I will still be long at 103. If it heads any lower, I'm still going to remain long, longer term, medium term. I expect this to go back up to 107 or higher. All right. But the big play right now is, let's say that we stay somewhat sideways in here. This might just take a little bit more time and then a bigger move happens. But once we get above 105, I feel like that is the sign where all systems go for bulls to take this at least up towards 107 and 107.50. So above 105, I'm going to be pretty aggressively bullish. For right now, I'm just waiting. I'm just waiting. I'm going to be patient. 103 is a nice level. Add more. Otherwise, there's a lot of indecision going on right now. And we'll, of course, see what the RBA does this week for rates. The RBNZ is probably not too far away. So if the RBA cuts rates, don't be surprised if the RBNZ does the same thing. Just given what's happening for central banks and the kind of the instant speak that we've seen since the last couple of weeks, which is central banks are willing to take action. I don't think that's the right answer. I don't think that's the right solution. And now it's almost like the markets are expecting this giant injection of stimulus in order to soothe their panic. So it really is like we are feeding a beast, and this might be an unsatiated beast where maybe they don't do enough. Maybe the central banks don't do enough and there's more selling ahead. So it might be short-term volatility, short-term happiness, short-term relief, but it may not be enough to sustain it, because in truth, I don't think that central banks are the reason that we can't avoid what is technically inevitable. Like, just give us a correction, have it be healthy, have us be a pull. But there's buyers out there. I'm very interested in buying at 16, 17, 20% reductions from historical highs, right? There are buyers that are willing to jump back into the markets. So we could see central banks around the world really fudge up this whole situation by continuing to do exactly what the markets need it to do, which is just prop it, and artificially inject stimulus and keep rates low. And this is the new normal, and suppress volatility. But I don't think that's really the long-term solution. So again, I'm not a central banker. That's not my policy, but we will see what happens. If they all start to chime in again, then we'll probably contain the panic, and we'll see the VIX come back down and settle back in, and there might be some short-term buying. But I do think that on the higher time frames, that this drop is significant enough that we might not recover. So this could be the drop. We could have that immediate buy point. But if we are sitting here before we go into the summer break in the end of May. I don't think this looks great coming out of this year. I think this might be a ton of volatility, and we might be setting up for more spoils going into October through the end of the year after the U.S. election. So again, central banks might step in. Central banks might be very vocal. They might take action and cut rates like crazy. We might see this technical level bounce, which I talked about here on the weekly charts. But if we come back in and bounce off these levels, but we fail to take out these highs, if we have this bounce here and a lot of indecision, then it's a toss-up. But I would suspect that the damage is there for October and the rest of the year to go into some really nasty territory once again. So we might be able to, kind of artificially make our way out of the panic that we saw the last couple of weeks. But I don't think that this is done. All right, so we will keep an eye on things, of course, and see how this develops. But for right now, we'll watch everything day by day. We'll kind of take the coronavirus in stride and see what's happening if we have a plateau in cases and recoveries. But it's no joke. We have to keep an eye on this stuff. All right, so let's go back to the charts here. So Aussie, New Zealand, above 105. I'm very aggressively bullish. I have levels, 105.20, 105.50, 105.80. I'm looking to stack these levels to the upside and take some nice probability trades and profits around 107 and change. I really think that we can push higher on this pair. I think we can get as high as 110. We might just have equal lows right around 103. We have seen higher highs on this currency pair from 106 to 107 to 108.50. If we push up towards a 109 to 110 handle, I would be extremely excited to be bullish and staying bullish towards that 110 handle on this Aussie New Zealand. Aussie dollar. This one really has the dollar written all over it. If the dollar ends up sustaining some serious weakness and we get on the right-hand side of this awesome trend line right here, then we should make a really nice recovery on this pair. Again, oversold conditions, relative strength oversold, divergence. You can see it pretty noticeably here on the momentum indicators. So price is making new lows, momentum indicator is not, and we are oversold on the relative strength. I want to see price on the right-hand side of the trend line, a reversal pattern of some sort. Let's see if we can get back to just 7,000. I think we can come back a lot higher than that, but it all starts with confirmation on the right-hand side of the trend line first. Without that confirmation, I am going to be very patient in here. All right. With confirmation, I'm more likely to start adding trades and building some profits up towards that 7,000 target. So confirmation is going to be key. CAD Swiss is another one. I like the long-term levels on CAD Swiss. I'm currently in a couple of trades. I've been buying since 72.60. I was filled again right around the 70. I'm trying to think around 7,100. I've got pending orders. I may have been filled around 72. I'll have to double check. But I'm looking at, again, I'm not looking to, panic and all of a sudden start selling this into 20-year lows. I'm looking at this structure and this structure and this structure and this support. And I'm looking to acquire and take some very small buy trades in here and have price respond to range conditions. So we get back to 7,500, we get back to 7,600. We might even respond to bigger levels towards 79 and 8,000. So I will remain a buyer in here, small positions. And if I deem it to be, looking better and kind of the sky is blue and everything's ready to buy and we'll add more. I mean, look, there's a nice little trend line break here. If we have this blue line, once it breaks and we get price on the right-hand side of it, then I will be buying more. But until then, I'm testing this level small. I'm testing this area with small buy trades, and I'll wait for more confirmation. I'll wait for double bottoms. I'll look at bigger lows to buy off of, and I'll look at 76 as kind of a big target for me profit-wise. And if it goes up higher, 7,900. But, I mean, we're talking about some levels that we haven't seen in 20 years of trading in the currency market. That doesn't mean nothing, right? There's something very significant about where these prices are going. So the fact that they're getting there, violently and aggressively, and maybe it's almost scary. But I still think you have to look at the structure. You have to look and see what price is actually giving us and offering us. If I was not in any trades on this currency pair, I would absolutely still be looking to buy off these levels. And that's what I'm looking at on a lot of currency pairs. From a technical standpoint, I'm looking at a certain direction, and I happen to be in the trades going in that direction. So I know that forces me to remain patient as things kind of have to confirm more before I add more to my positions, or I have to be a little bit more patient to see is there more pain ahead. But that's all about equity management and risk management. So that's what is really, at the end of the day, the most important thing as traders. CAD Yen. CAD Yen, I would still look to stay somewhat bearish. I mean, I think that you can see the volatility here. We had a double top. We broke this level. This could be an attempt at a pullback. We might have some really choppy volatility this week on the yen pairs. I would still look for more downside. I think that we will come back in and retest these August lows from 2019. That's around 7,900. So 79.00 probably gives us a chance to sell off of resistance around 8150 or so, maybe between 8100 and 8150, and look to sell this back down towards lows. So I do like looking for some scalping opportunities on yen pairs. Swiss yen, probably going to stay out of this one for right now. Euro pairs. The euro is just dominating right now. I will say that if I extend this line, which is, again, structurally a very solid resistance point that should have extended right there. Give me 1 second there. So we have resistance from 2018, resistance from 2018, resistance from 2019, resistance from 2019. We have a 2-year high, and we just went vertical from 61 to 71. That's 1,000 pips in like 8 days. The currency market does not do stuff like this very often. Now, it does happen, yes, but I do have a small sell trade in at 66.50. It is upside down. I have not added anything as of yet. We'll talk about it this week in my trading room. We have a nice aggressive trend line that we are looking for in here. Again, I'm looking for indecision, which we're starting to see. I'm looking for oversold conditions, which you can clearly see right here. That's really nice on the 4-hour chart. That's actually overbought, my mistake. That's overbought conditions and momentum and price disagreeing. So technical signs are starting to get there. Aggressive trend line is going to be important for confirmation. Another thing that we can look for is a line break. So the 8-hour chart, no signs of bears yet. The daily chart, clearly no signs of bears yet. The 4-hour chart, which might be what I start to look at this week, is looking between a 4, an 8, and a daily. Because this has been, seriously. Are you serious? This is February. I can't remember the last time I've seen February trends be like this. But that's okay. Clearly, we're dealing with some different things. We're dealing with a market that's been like squeezed into low volatility, and it had to boil over. And so that volatility is here. That volatility is offering some great trades. So, but because this has been a 1,000 pip run with no pullbacks, I know that if I'm in at 66.50, then I will probably have to add a second trade up here with some confirmation for a U-turn, and from there work my way back down to previous highs, work my way back down into some balance, and take some profit. I might look at this trade as a break even and this trade as a win and walk away from this trade with some profit. But I'm not looking at this giant move this way, not at least on this currency pair. Maybe Aussie Swiss I hold longer, Aussie CAD I hold longer, Aussie dollar I hold longer. But Euro Aussie, slightly higher volatility. Euro CAD, another one that's going to balance. CAD Swiss, another one that's going to balance. So there are other currency pairs that I would like to be trading as far as a position that's going to make me hold on to it. So I will be looking for some U-turns between the 4-hour, the 8-hour, the daily. We're going to spend some time on that this week in the Flex trading room because I want to do my best in March, especially mid to late March into April, May, by just following along. I'm going to try to do a much better job of following along. There's a lot of other currency pairs that we are not exposed in right now that we can be trading. We can trade confirmation. So that's a really important tool. That's kind of the secret word of this month until the end of, really until May. It's like trade what you see, trade confirmation, stay with the flow. And, again, and the flow might be a U-turn. I'm not denying like this is bullish, but that doesn't mean that I'm buying. This is bullish for 1,000 pips and no turns. If we go red, I could still sell and make some really nice profit, right? There's no denying that 1,000 pip move will probably pull back 23, 38, maybe even 50% of that move just to find some balance like the Forex market typically does. So we'll be watching different time frames on a lot of these currency pairs that have been ballistic, and a lot of that kind of parabolic ballistic movement has been on the euro. Euro CAD, same thing. We are going well on our way towards 5,000, which is nuts off of this U-turn and trendline break at 42.50 to 4,300, just straight up movement. But overbought, yes, divergence sitting in right now, 5,000 round number. Don't be surprised to see this crazy kind of irrational move find some heavy resistance and start to come back into this area to balance. So if we have, and again, what I want to see is confirmation before I sell. I want to see confirmation to sell high and, still trade it small. I'm not going to take a big trade size, but if we sell it small and we get paid on a nice little correction, a nice little balance, then easy peasy. All right. Euro Swiss. Euro Swiss, one that we've been waiting for a while to turn. It's at 106.80. I'm going to try to hang on to this one at least to 110.50. There's certainly a lot more upside potential on the Euro Swiss, but I would be ecstatic just to get this up to 110.50 and take out previous highs, find a yearly pivot from 2020. There's pivots and pockets and inefficiencies a ton. There's also a beautiful channel. If we form lows here, which it looks like we're carving out some lows, let's gravitate back towards that outer channel. Resistance, resistance, future resistance right there around 110, 110.50, and that's it. I will look to stay bullish on this, and I don't know how aggressive I'm going to be. I want to be super aggressive, but we've also seen Euro strength and Swiss franc strength over the last couple of weeks. So we clearly need to see, Euro just stays the same or stable, and the Swiss gets weaker. If we're looking at the basket, Aussie Swiss, 20-year lows, New Zealand Swiss, close to 20-year lows. Inefficiencies that are popping up left and right on Swiss pairs. Pound Swiss, near historical lows. I mean, from a basket standpoint, I'd love to see the Swiss National Bank be very vocal about either cutting rates again or potentially looking to, have a certain tone to their dovishness or have a certain exchange rate in mind. But we'll see. But either way, at least we're coming off the lows here on 106. And if we head up towards 110, 110.50, there's serious profits to be made there. And I'm going to continue to hold long because I've been long since like 109, then 108, 107. I've got some small positions in 110, 110.50 is a nice chunk of profit that I'll be looking for. Euro pound paid us out really nicely last week. We made a few hundred pips on this trade, and it's still going, which is ridiculous. But not. I mean, is it? It's not. Because we did say that if we hold these lows, we're at least going to get back to the center high around 85.70. That's where a lot of us were taking profit last week, respecting the structure. Today's push is even higher, and where are we coming back to? We did say that ideally we expect this to come back into this October inefficiency. What I think is pretty amazing is you look at the measurement from this low to this high, and you double that. And you're looking at that, kind of double bottom movement. We're breaking now above this center high. And if you measure that range, it should be getting us right back into this area around 88 to 8,900. So if there's a pullback in here, I would be looking to stay long and remain long as a scalper on Euro Pound. But we did do a pretty good job of taking some nice profits. We had this trade off the lows in around 82.30 or so, or 83.30 rather, and then we had a trade around 84.79. So we got this trade into profit, and we got this trade into a nice profit, and we collected a nice win on two trades. So that was a good trade overall, as the euro was going ballistic elsewhere as well. Euro yen, I'm probably going to stay out of the euro yen. This has been wild and crazy. Yen has been stronger, so has the euro. You can see that reflected in price. It's been really wild. Euro New Zealand, another one. Look at Euro Aussie. Straight up ballistic movements. Euro New Zealand, straight up ballistic movements. We're coming back into highs that we haven't seen since 2018. Now, again, I think since we did some pretty good work of closing above these previous highs, I would not want to jump in and be a seller. All right. I think if we're a seller, it's at first short term to see if this wants to come all the way back into this range, because I have a sneaking suspicion that we might see this move here, some consolidation, but this continues to go higher. All right. So I'm going to be cautious on this one because this is breaking some pretty serious structure. So unless, reality sinks in this week on the euro, we see some long weekly candles or we see some daily bearish candlestick formations, I would be looking for, any type of indecision in here still has a lot of buy potential. And if we're going to continue to see higher volatility, the euro might be a big beneficiary of higher volatility. As a safe haven pair as well, the euro could just continue to run. And speaking of euro running, if we're going to see the euro run, the euro dollar is another one, currently trading at 11.70. Now, previous highs back to 112, that's been the obstacle that just can't be broken. So are we going to see some reality setting in? Possibly. Can we see this, score point for the bulls above 112? Maybe. Can we see this come back here and challenge and consolidate before we go up again? Maybe. Or does it give it all back? I don't know. We're really gonna study the price action this week, right? I mean, that's a lot of consecutive candles. I don't expect that to be sustainable towards 115, 116, 117, although that's where I want this to go. We have been patiently waiting for 2 years for this thing to have a technical reason to run to 116, 117. Now, is it going to get there in a straight line? Judging by this, it certainly is making a valiant effort to do so. But the reality is we should have some type of relaxation, some type of breath. But we'll see if the bulls are really interested in taking this higher. And that is also looking at the reflection of the dollar index. Does the dollar index continue to go lower? Does the DXY continue to go lower? Or does the dollar have one more push in it? Does the dollar have one more push in it, which brings us back down, possibly back down? Then we see this thing go bananas once again. I don't know. But we're going to be watching this area here. If we start going very bearish and getting some U-turns again, it's going to be really nice just to follow some line breaks. Let's follow the sentiment strength line, follow some line breaks. If we have some U-turns that are bullish once again, then perhaps we jump back on the 4 hour, the 8 hour, the daily, and we trade this thing up. Again, going to the base of this 2-year channel, which we're talking all the way back up here. There's a huge pocket that I've identified back here around 1690. So I love this 1700 zone. And if we can see a nice price pattern forming, this could be all setting up for a nice price pattern, reversal pattern to head up towards 117. But I really hope that this pair just doesn't do this. I would like to be a participant in here somewhere. And I feel bad that in the trading room, we did not take trades at 108. I know that we had traders that did. I just wanted to be safer because the euro was tanking early this year. But we came right back to fill that pocket at 108. That was a French selection gap, and boom, to the upside. I think what was strange about this was how counterintuitive and kind of how quickly all of a sudden the euro became identified as a safe haven pair. So that's something that I certainly didn't see coming for 2020, given the tone that the euro took early in the year. But now it is obviously safe haven, and that is going to continue. That'll continue to be a tone for 2020 as we head into the end of summer and a U.S. election year and things like that, and with the uncertainty surrounding the coronavirus as well. So I think that means good things for this to go to 117. It's just, how does it get there? I don't want to just jump in when it's jumped up 400 pips. I'm not going to jump in and chase this thing higher. But I'll certainly be looking for some type of breath, some type of pullback to take some small positions and just respect the structure and see if this is indeed ready to go higher. Pound pairs. Pound Aussie. I was looking at this to run up towards 2.00. We had highs last week around, trying to get that candle there, it was like 197 or so. Highs around 198.31, just shy of that 2,000 mark. The pound remains somewhat vulnerable. You can see the choppiness here. Is this nuts? Like the Euro Aussie straight up for 8 days. Pound Aussie, not so much. So very, very different price action going on right now. Again, Pound Aussie, if we break this area, I'm still a seller. All right. But if we see lots of chopping here, this is probably not the best currency pair to trade. So if it stays indecisive, I'm not going to trade the Pound Aussie. Pound CAD, same thing. Right? Lots of indecision on the Pound Canadian. We can see some sideways movement here. This might go up one more time to retest highs at 77, which are the December 2019 highs from the UK election. But more sideways. If we break this structure below 7,000, I would say that below 7,000, I remain a bear. Below 7,000, I'm bearish on the Pound CAD. I really don't have a lot of upside trades on this. Just because it is so choppy. So I'll probably just steer clear of this one and just set some chart alarms. If it breaks below 7,000, I will look to stay bearish with it. Otherwise, that's about it on that pair. Pound Swiss. This one is coming into our buy zones. All right. Now, again, this might be scary. This might be like, oh, man, what are we doing trying to buy this? Look, this drops straight from 28 down to 22. Okay. This is where I want to start seeing some U-turns. If this is a swing to the upside, A, B, C, D, correction to the downside, this could be a really nice setup for us, right? This could be a really nice swing, set up a harmonic pattern, something like this, and we look at confirmation to buy, and we try to get this thing back up to previous highs. Now, maybe this is not exactly where to buy it from. Maybe we have some stalling here. Maybe it drops more aggressively into deeper Fibonacci swing levels. But again, we can keep this really simple. If we have a turn, if we have confirmation, a sentiment strength line, here is the 4 hour. Has it turned bullish? Not yet. Has it turned bullish on the 8 hour? Not yet. Has it turned bullish on the daily? Not yet. So a little confirmation goes a long ways, especially when we know what we're looking for. So I do want to see some U-turns on those sentiment strength lines before I start jumping in to buy the Pound Swiss. Pound Yen. We had nice sell discussions last week around 144, 144.50. This thing has tanked and dropped a ton. There's probably more downside to this. I mean, this could be just the push. We could have a pullback in here. All this previous support around 141 becomes resistance, and the Pound Yen continues to sell off. There is a lot of downside potential here into these October inefficiencies of 2019. So I would be looking to stay fairly aggressive on bears to the downside. All right. I mean, currently we're trading around 138. I'm looking at levels around 132. That's a lot of distance and a lot of pip opportunities to stay bearish on pound yen. I'll probably look at some trend-based systems and trend deployments on smaller time frames to stay bearish on that pound yen. Pound New Zealand. Pound New Zealand, again, just as choppy and indecisive as the pound Aussie. This looks fantastic if we can see this level break. That confirmation is going to be critical. We would go from maybe 203 down to 196. We could certainly go faster than that, but if we need confirmation, that's the U-turn and confirmation we need. We have to break that little rising wedge. And if that's the case, that should be about a 600 or 700 pip drop just to respect this previous structure. But the reality is this might end up going from highs to lows and go from highs to lows. We might be range bound from highs at 205 all the way back down to 183. That's over 2,000 pips for a range. I'm respecting this area, but this could certainly be a much bigger trade ahead if we respect these highs and hold these highs around 205. So that could be some big trading ahead on the pound New Zealand. Pound US dollar. We took some scalps on this one last week. It's into our levels. We said 2,800 or lower, protect your profits. Traders were short at 3,000. Traders are short over here at 2,950. Get your profits around 2,800 or lower, and it's there. So it may go a little bit lower, maybe 26-ish, 2,500 area, but I'm still looking for a potential buy opportunity with some confirmation, maybe in the next month or so. Maybe if the Fed is going to cut rates it's March 18th is the Fed rate decision. If they cut rates by 0.5%, that would, I would think, allow the markets to really start moving aggressively on pricing in some dovishness and pricing in some even future cuts by the Fed this year as we head into the election and all this stuff in the summertime. But we should still see that weaker dollar as a byproduct of this. And technically, pound dollar drops a little bit lower, gets us some nice buy levels, and then we see a weaker dollar come out of that, and pound dollar becomes a great buy opportunity. New Zealand CAD. New Zealand CAD, New Zealand Swiss, I remain long. The New Zealand pairs are really straightforward. Get on the right side of this trend line, everything looks a lot better. So I have buys in at these equal lows. We have major channels on the New Zealand CAD. If it goes a little bit lower towards, maybe 82, 81, 8,000, I'm prepared for. It's a big round number, but the structure is really solid. Support, support, support. Even if it's going to drop a little bit lower towards a round number like 80, I wouldn't be surprised to see 80 get back up to channel levels around 86 or 87 or 88. I mean, it's just following a nice long 2-3 year channel, and I think this currency pair will continue to play out with that structure. New Zealand Swiss, similar. Big channel. Okay. Some bigger pushes into the lows as the Swiss became quite strong. Again, kind of a last minute push from last week, very aggressive to the downside, oversold, disagreement. Technicals are there. I just have to be patient. Here's a trend line that I'm going to make a small adjustment on right there. Right side of the trend line, things look better. I do have a long-term pending buy at the lows at 57.50, which we're currently trading not that far away from. Okay, 6,000 round number, apparently not holding for today. Long-term 20-plus year lows at 57.50. I certainly have an entry to buy right there, but it's small. I traded it here. I traded it here. I'm waiting for this trend line to break. I'm waiting for more confirmation. I'm just sitting in here with a small position and just kind of testing. I might nurse about a 1% drawdown on this fall, but if we see some confirmation, I turn this into a 2, 3, 4% profit to the upside. Because I'm not going to get overexposed on the left side of this trend line. What I'll do instead is I'll take those little small trades and nurse my drawdown dollar-wise, and then I'll add more with confirmation, and I'll turn it into profits on the upside. So that's the plan of attack on this New Zealand Swiss, but it's going to take, again, some more patience. New Zealand Yen. New Zealand Yen broke some really major structure. We said if it breaks out below this support to sell, which was 70. 70 broke, we came all the way down to 66.50. That's a nice 350 pip break, retesting the lows back in August 2019. Some good scalping there on Friday, good scalping all of last week. Hopefully traders are able to take advantage of that. New Zealand dollar. New Zealand dollar, looking for a trend line to break. We're sitting at major support around 62. This is going to be a very interesting trade. Certainly if we get on the right side of the trend line. I love this trade coming all the way back up towards 67. And I wouldn't be surprised if this finds a way to come back towards 7,000. But the dollar is a big factor here. Confirmation on the right side of that trend line is a big factor here. It might not be that far away, but I think that confirmation and getting on the right-hand side of that trend line is going to be key to this currency pair. Dollar CAD, we had a small position in around 33.15, and you can see that price came back to retest. I want to see if this is actually putting in a bit of a high. So we have close to overbought conditions. Lots of disagreement here on the daily chart. Hopefully this is a high, and this starts to come back into this level. It's a reversal pattern to head back down to 3,000. So I'm going to hang tight on this trade at 33.15 and see if we can get back down to this low, which is around 3,200 for about 100 pips of protected profit. If it's a reversal pattern, then I'll try to hang on to it even further down towards 3,000, but I'll try not to be super greedy on this pair. But I'm still looking to hang on to profits towards these previous lows around 3,200. Dollar Swiss is fast and aggressive and violent. We're currently at 95.50. I did have a pending buy at 9,559. That has been filled. This is small. All right. If this drops more substantially to 92.50, trade 1, trade 2, long term, I am absolutely going to hold this to 1.00 or even higher at 102. All right. But we might have this filled at 95.50. This jumps all the way back up here towards 96, 97. We might just want to grab some short-term profit and see if this goes from high to low, lower high to lower low, lower high to lower low, lower high to lower low, maybe makes a nice little channel over here, and we end up buying this off of major lows, and we come back up to 1.00. And this just is nothing more than a big range, right? You see all this resistance here, all the support here, so focus on buying low, taking profit at highs. But if we're in at 95.59, which I am, I've got a small position in right there. That was pending from months ago. If that's filled and we have, 50 to 100 pips of upside this week, we might just take it. Might just take it, not worry about it, and grab some profit. All right. Dollar yen, this is another one that's going to be really interesting to keep an eye on. Below 108, I'm looking to stay pretty bearish. So crazy, right? Just a big fake out, right? This big break above 110, all in a day, went up 170 pips, went up to 112, and just rejection city. Dikembe Mutombo style at 112, and we just came crashing back down below 108. So where is the dollar yen vulnerable? Well, right now, more risk-off trading means this is vulnerable back down to 105. This is vulnerable down below 105 to 100. So breaking this low, I'm not 100% convinced I'm going to position trade this, but I am certainly looking and favoring that if we stay below 108, if we have any type of pullback here, I would be looking for the bears to continue to at least try to revisit this 105 area. So if we can sell this back around, 108.50, 10900, possibly even 110, which we, saw that as resistance for quite a while. Between those three levels, I'm looking for confirmation to sell. All right. And so in my opinion, I think this is going to be better for short-term trading, just because I certainly don't want to be position trading and getting stuck in any yen pairs. I could be dead wrong on the overall direction, but if I can take advantage and minimize my wronginess on some of these yen pairs and just grab some maybe 15-minute structure, 5-minute charts, even 1 minute for intraday scalping, I'll be following these along pretty closely to see if I can grab some pips. And, I'll keep it expectation-wise, maybe, grab an extra 30 to 50 pips. Maybe if I get into profit, move a stop loss and let it become a trailing stop and see if you can hit the big home run like we had last week. I had traders that were in at 110, 110.40. They rode it all the way up with trailing stops to 112. I had traders that turned around and sold it at 112 and put in trailing stops and rode this thing all the way back down. So there are certainly ways to make money here. And it's just, if you're in profit, eliminate risk, and you put a stop loss in to trail, you never know what the market's going to give you. If the market's going to be generous and run like crazy, then you might as well put yourself in a position to enjoy it. All right, so that is about it. I got a couple of exotic pairs here. Peso, just a ridiculous run. Finally, after literally, this is December 2019. I have not been so bored on the peso, and all of a sudden we see what? Oh, no big deal. 13,000 pips in the last 7 days. This has been on permanent siesta mode for 3 months. Then we see this giant move to the upside. Fine. All right. I'm still going to sell it way the heck up here around 20. I'm still going to sell it way the heck up here around 22. But, I'm not going to jump in and start chasing the peso right now. I do think that this peso probably looks better to the upside from this low to high. A pullback here sets up higher lows. We might have one more push into this area. Previous high. Lots of profits to be protected here for the bulls. And then the bears come back and take it to the downside. All right. Crone pairs, we're staying out of the crone for right now. We still haven't broken any major structure, although that's a really nice turn for today. On the dollar krone, we'll see if that continues to the downside. Euro krone, euro has been strong. This one has not quite had the same activity as far as the bears go. And dollar South African rand, this one's going to be interesting. I haven't looked at this since this morning, and boom. All right, looking much, much better. So we had a trade filled around 15.4. Beautiful bearish candle coming into today. Overbought conditions, divergence on the higher time frame, range bound trading from 15.4, 15.45. Hopefully this will be close to our top and we get some confirmation and we take this thing down for a nice little 5 to 10,000 pip run. From this high to this low is about 15,000 pips. So I'm just going to sit tight on the South African rand and see if this becomes a nice little sell trade for us. I may start looking at profits anything higher than 5,000 pips, but I'm going to try to let this run a little bit. This is just a really nice technical trade. Let's see it cooperate for us. All right. So that's going to do it for today, traders. If you're out there following me on social media, you can find me out there on Instagram, Twitter, Facebook, YouTube, videos like this, and my Keep It Seriously Simple Best Trading Strategies video series. I've got modules on YouTube. It's free for all. Take a look. Share the video links if you'd like. Pass them to your friends or communities out there. I'm just trying to offer some solid help for traders out there that need it. If you have any questions, feel free to leave me some messages. You can send me messages on the YouTube channel. You can send it to me also in Instagram, Facebook, all that good stuff. I am around. Let's have a good week. Looking forward to seeing all my traders tomorrow in the room. And that's it, traders. Let's have a good week. It's going to be wild and crazy. We'll be watching lots of data this week as March unfolds. We're, again, it's Q1. We still have a lot to go. Lots this week. RBA, let's see what they do tonight. If they cut rates, there might be a little bit more pain or squeezes on the Aussie pairs. We might have a counterintuitive move where it's like, oh, they cut it, but the market's expecting it, so they buy it. We've seen rate cuts like that before where the market actually responds to strength, which is weird, but we'll watch if they cut rates. We have CAD on Wednesday as well. We have OPEC on Thursday, non-farm on Friday. March 18th will be the Fed, and as we talked about with the CME group, the Fed Watch, looking at a big step in by the Fed to cut by 0.5%. So that really is a complete reset. Raising rates 4 times in 2018, cutting rates 3 times in 2019, cutting rates potentially again in the next couple of weeks by 0.5%. That's kind of a big slap in the face of monetary policy. It's almost as if the central bank has no idea what they're doing. All right, so anyway, this could be, again, a wild ride for the next couple of weeks. So buckle up, be ready, trade accordingly. It's all about equity management and following the right rules and strategies. So the good thing is, on my end, I've got some trades in. I'm taking some position trades, but I've got a lot of opportunity to start trading more short-term. Follow what I see, follow those confirmations. That's what we focused on this week in the trading room. All right, traders, let's have a good week together. Talk to you all soon. Bye.